Hello and welcome to this week's Forex Outlook here at xm.com. I'm Andras, your EU currency analyst, and I'm here with my colleague Rafi Boyajan. So Rafi, the dollar index is down the week after advancing in the two preceding weeks. However, it is not down by much, and a strong jobs report, which is due at 12:30 GMT, has the capacity to allow the index to advance for its third consecutive week. In September, non-farm payrolls were biased downwards as a result of the negative effects of the storms hitting US soil. And now in October, they are expected to be biased upwards as the economy entered into recovery mode following the storms. Back in September, market participants focused on wage growth instead of the number of positions added to the economy, and this could be the case in October as well. Average earnings, though, are expected to slow down from September's printings. Beyond that, other developments driving the US currency this week were Trump's pick for the individual to lead the Fed after Janet Yellen's term expires in February. That's Jerome Powell. And we also had developments on the tax front. How do these change the outlook, Rafi?
Right, so we didn't see much of a reaction in the dollar to the unveiling of the tax plan by the Republican Party, the House Republicans, and then President Trump pretty much, we already knew that Jerome Powell was going to be nominated through various reports suggesting that. So neither came as a surprise. The tax plan, the big announcements were already leaked beforehand. But there are some concerns for the tax plan. For example, there were large tax breaks that were being removed. Also, we don't know how long it's going to take for the entire process to complete before it reaches its final passage through Congress. Also, with regards to Powell, we saw Treasury yields falling back because prior to Powell becoming the favorite, before that, the previous favorite was John Taylor. So there was some reversal of the gains made from those expectations. So the dollar didn't see much of a reaction because there's still a lot of uncertainty ahead. Plus, as you said, the jobs report, if it does show some tepid signs of further pickup in wage pressures, that could be significant. So this will likely bring the focus to the December FOMC meeting, where the FOMC members will give their revised projections. If we do see some further progress on the tax front and the budget, US budget, before the FOMC meeting in December, that could affect how the projections come out at that meeting. So that's going to be the real focus in the coming weeks, how things are going to progress up to that meeting.
So there is uncertainty on the tax front, and a Powell Fed chief was mostly priced in. But let's move on to sterling. Yesterday, it fell sharply relative to majors, including the dollar and the euro, after the Bank of England meeting. Why so, Rafi?
Although the vote itself was a bit hawkish, for example, forecasts were that 6 MPC members would vote in favor and 3 opposing it. It turned out to be that 7 MPC members voted in favor of a rate hike. You would normally have expected the pound to gain on the back of that vote, but looking at the minutes in the bank's quarterly inflation outlook, the bank did say that looking ahead, they only expect to raise rates twice in the next 2 to 3 years, and that's in line with the market implied yield. In the previous meeting, the bank had previously been saying that we will be raising rates at a slightly faster pace than what the market yields imply. So this means that the bank actually isn't signaling the market that they're going to be raising rates faster than what markets are pricing in. Instead, they're going to be raising rates in line with what's being priced in by the markets at the moment. So that was perceived to be dovish. That sounded pound tumbling more than 1.5% against both the dollar and the euro, though it did manage to find support around 1.3030. So it's going to be important to see what happens on the Brexit front and in the coming weeks. If we do see some negative developments there, perhaps that could push the pound below 130.
So similar to the ECB's dovish tapering, the BOE delivered a dovish hike. And as regards next week, what are the important data and other important events that we should be looking for, Rafi?
Well, in terms of data, it's going to be a slightly quieter week. The things to focus on next week will be the Reserve Bank of Australia and Reserve Bank of New Zealand policy meetings. Both are expected to hold rates unchanged, the RBA at 1.5%, the RBNZ at 1.75%. We had disappointing data on retail sales out of Australia today, so it's pretty much certain that the RBA won't be raising rates anytime soon. We are seeing consumer spending being pressured by weak wage growth as well as by high household debt, but it's going to be important to see whether the RBA is going to change its outlook on the economy in its statement on Tuesday. And as far as the RBNZ is concerned, we know that the new Labour-led coalition government there is seeking to make reforms to the RBNZ. Its mandate, they want to add employment in addition to inflation to its mandates. So the RBNZ is unlikely to change its stance anytime soon until at least we know what's going to happen, and those reforms potentially won't come until March next year.
Thank you very much for your analysis, Rafi. Thank you everyone for watching, and have a great day.